Hello, this is me, Salat Karki, and my topic is research on financial market and capital budgeting analysis. And my group members are Ravi Bhuzel, Himanshu, Sif Deepak P. Okay, and then in the my part is the introduction part, and in this introduction part, I'm gonna talk about the different markets which are like the financial assets such as stock, bond, treasury bill, options, currency, etc. In this presentation, we're gonna discuss about the difference between the various types of stock like common stock, bond, and preferred stock. We're also gonna discuss about the 5 principles of the finance, which is very imperative for the business. And not to forget that we're gonna talk about the Australian share market, and also we will know about the Australian bond market, sensitivity analysis, and NVP break-even analysis will also be discussed in the later part, and those will be done by a friend. And thank you.
Hi, my name is Shifali and I'm going to talk about the comparison of 3 financial products, which is common stock, bond and preferred stock. So first I'm going to talk about the ownership status. The ownership status in common stock is with the stockholders. In bonds, they don't have any ownership over the company, but in preferred stock, they also have ownership over the company. Then comes the nature of funding. In common stock, it is by the owners. In bonds, it's creditors, and in preferred stock, it's again the owners. Then comes the risk. In common stock, the risk is very higher than the bonds and the preferred stocks, whereas in bonds, it is less risk than the common stock, and it is even less than the preferred stock. In case of preferred stock, lower risk than stock and higher risk than bond. Then comes the income. In common stock, it is the dividends. In bonds, it's the regular interest, and in preferred stock, it's again the dividends. Then comes the voting rights. Common stock do have voting rights. In bonds, it doesn't have voting rights. Then preferred stock, they also don't have any voting rights. Then comes the maturity. The common stock does not have maturity date. Bonds, they have a bit of maturity date, and preferred stock, they don't have any maturity date. Then is priority in liquidation. Common stock have least priority in liquidation. Bonds have the highest priority in liquidation, and preferred stock, they have higher priority during liquidation but than the common stocks. Thank you.
Hi everyone, my name is Ravi Bhuzel. Today I'm going to talk about the analysis of 5 basic principles of finance. Money has time value, risk requires a return, market price reflects the information, the market price of cash flow principle of individual response to incentives. Money has time value. The value of certain amount today is not equal to the value of the same amount in the future. It means that today we're gonna spend some money today, its rate gonna be more far than the today's rate. Like it means that a certain amount of invested for a certain period, the total value should be higher in the future. Same as risk requires a return. Risk taken by an investor requires a return when investing a certain money. It means that the finance also believes that the return is higher on the investment if the risk is higher. Market price reflects the information. The market price of share reflects the information of company like profitability, etc. It means that it shows the performance of the company like revenue, sales, which has been increased or decreased in a particular period of time. Same as cash flow principle. Investor always invest in those companies which have higher cash flow in the initial quarters of a year. It means that the investor who wants to invest their money in the company, like they want to invest in those companies who have the more higher cash flow in the earlier period of time than in the period of time. Same with the principle of individual response to incentives means every people responds to the incentives from the different activities like investment in different types of assets. Now my friend is going to take another slide. Thank you.
Hi, my name is Teju Sengchong. Today I would like to present the fact findings of Australian bond market. In Australian, bonds are traded secondarily in Australian Security Exchange (ASX), and there are 2 different types of bonds, which are type of interest and type of issuers. Type of interest can be classified as floating rate, interest paid bond, and index bond. type of issuer can be classified as government bond and corporate bond. And in Australia, Australian rating is the main rating institution. We have ratings such as AAA, AA, and BBB, and AA is the highest rating. This kind of ratings indicates the risk when investor investing in the bond. So the lower of the rates, the greater of the risk to the investor. And in Australia, the Commonwealth Government Securities is also known as government bond, and it pays interest every 6 months. So the advantages of this kind of bond is very less return, less risk, and also very easy to sell in the market. In contrast, corporate bonds is issued by corporation and company, and it offers higher return, but it also have higher risk and very hard to sell in the market. And we're talking about yield to maturity. It refers to the sum of total return on a bond when it is held to maturity. And corporate bond is interest rate, which is paid annually or semi-annually on the face value of the bond. So the yield to maturity coupon rate has the inverse relationship while determining the price of the bond. And there is also inverse relationship between interest rate risk and the price of the bond. And my group member will continue.
3.
Hi, my name is Deepak Adhikari. Today I am going to talk about the fact finding of Australian share market. ASX, Australian Security Exchange, is the stock market in Australia. Shares are traded electronically in ASX, and listed companies are classified into 13 sectors. There are almost 2,200 companies listed in ASX. Market capitalization of a company is the total market value of shares of that company. Market capitalization is calculated by multiplying total number of shares and market price of share. All ordinaries XAO is the oldest share index in Australia that measures the market capitalization of largest 500 companies of ASX. This is a graph in between 2017 and 2019. The index dropped to lowest in December 2018 in the 3-year period. There are various factors that affects the fluctuation of AOX, like performance of macroeconomic variables, profitability of the companies, political stability, etc. And this is the data of sensitivity analysis. Sensitivity analysis performs the sensitiveness of a dependent variable when independent variables are changed. There are certain conditions. NBP with no change, when unit sales decrease by 10%, when price per unit decreases by 10%, when variable cost per unit increased by 10%, and when cash fixed cost per year increases by 10%. And the result is on the board. NBP. When NBP with no change, sensitivity is 0, and when unit sales decreases by 10%, it is negative, and it is called moderate. Sensitiveness is moderate. When price per unit decreases by 10%, the sensitivity goes much higher in negative sense, and sensitiveness is highest at that condition. And when variable cost per unit increases by 10%, it is moderate. The sensitiveness is highly moderate. And when the cash fixed cost per year increases by 10%, the sensitiveness is the lowest one. Thank you. Now I will request my another friend to come and join and to continue the presentation. Thank you.
Hi, my name is Sumanshu. And I'm learning about the topic NPV break-even analysis. First, the NPV break-even analysis is a condition in which NPV of certain project becomes zero in certain level of sales. And the second one, unit price decrease by 10% and the sale will decrease from 4 lakh to then NPV is 3.365 and 2.999. When the sale unit is this way, then NPV is $0. Hence, the NPV breakdown is when sale unit is $365,299,050. And after all the things, my friend giving all this presentation, after I am going to spell the conclusion. In financial market, financial product like bonds, assets instruments which have a monetary value like the bonds, share options, etc. are traded. And the second, common stock. Bonds and preferred stock are different in terms, ownership and income risk, etc. And the bonds are traded in ASX Australia. Both bond and stock in Australia are traded in the Australian Security Exchange. Similarly, the bond in Australia can be divided in as a government sector and a corporate bond. OX All Ordinaries is the oldest stock index in Australia. Thanks to the lecturer and all my group member by making the video for the presentation. That's all. Thank you.